Hi guys, Lee Gettess here with the Market Sense for the last day of July 2018. The charts we'll look at in this presentation are provided to us by Gettess and the Trade Navigator software. And our first chart here is a weekly bond market chart, and basically for a large portion of the year it's just sort of a big sideways pattern here. And the little drop off they've had in the last couple weeks has kind of left them in the middle of what you can see for the last couple months. We were kind of looking at support in the 142.07 area and resistance 143.27 for this week. They have been to neither. But that's not a big surprise. The FOMC is meeting this week. They will issue a statement Wednesday afternoon. I don't think they'll do anything with interest rates, but they'll parse every syllable of the statement to try to determine what they're going to do like in September. And they may react to that. So we could get either side of these blown out here at this point. I think the resistance up here at 144.16 is probably a more likely target. It kind of looks like they're holding in here, but I will say this support from 42.07 down to kind of draw an imaginary line here around 141.20. As long as they hold in there, I think they will eventually go back up. Now, if they start breaking lower than that and do a full retest of this lows, then maybe they're not even going to hold. But at this point, I still think the more likely move out of here is to the upside, and that is despite the Fed probably going to raise interest rates at least once and maybe twice more before the year's out. So kind of an interesting situation here, but very difficult to control risk when you're doing something in front of the Fed. Stocks have a little different situation. Number one, they look a little better. They've been sort of moving up since early April. This week they're getting buffeted by earnings reports from various companies, and they tend to come late in the day. We're getting some really big moves late in the day that either wipe out or reverse or continue moves they've had during the day. So little difficult to trade them because everything's happening very late. We also have things being said by members of the administration counteracted by other members of the administration within the next 20 minutes that jolt the market. But that's neither here nor there. The most important support for this week, I think, is around 27.80. We have not been there. We seem to be holding in the 28.05 area, which is the middle moving average. And if that is the case, then we would expect them to go challenge the 28.47 area, which gets them close to last week's high. And that'll be interesting because if they can take that out, then we've got the Keltner channel up here and the previous high for the year, both around 28.80 level. That's kind of an obvious target if they do go up there. As I mentioned last week, since this low in April, we've got either two or three, and then one more swing up. So it wouldn't be too surprising to see them turn back down, at least go back to the middle Keltner channel here at some point, even if they are going up in the big picture. They might be a little tired, might be time for a little rollover here. But a lot of that is dependent on what they're getting from the earnings reports. The more good surprises they get from companies making money, the more likely it is they're going to test this high. So that's what we've got for you today. I hope you can find something profitable to get yourself involved.